everyone. It's Peter Grandich. Always want to remind you it's not to be considered investment advice. Always speak to a licensed financial advisor before making any investment decision, and always read our disclosures. Well, this Michael Gentile spoiling me with Mondays after Mondays with good news. And joining us to tell that, besides Michael, is the CEO of Radisson Mining, Matt Manson. Matt and Mike, good morning. And as always, early good morning.
Morning, Peter.
Morning, Peter.
Well, Matt, a week ago, great news. Everything I'm reading in this press release this morning sounds good, but tell us what it all means.
Well, I mean, this is coming about a week after we had our jewelry box press release with super high grade at the top of the O'Brien deposit. So this is now at the bottom of the O'Brien deposit. Well, actually, probably not the bottom. We've drilled a very deep drill hole here, the deepest hole ever drilled in the history of this project. We went through our target area 500 meters below the base of the old mine. This is the first hole, not only the deepest hole, the first hole to go below the old mine. No targeting information other than let's just see what's down there. And we've come back with 31 grams over 8 meters. It's dominated by a 242 gram hits. That's 8 ounces per ton over a meter, but it's within classic mineralized Pichet rocks, exactly where we would have wanted to have seen that. Again, beyond our expectations to get something that high grade. But the story here now is that we've drilled since September 7 holes below the existing mineral resource. And 5 of those 7 have hit resource grade material. Several of those holes have hit exceptionally high grade resource grade material. This is 31 over 8 below the old mine. We've had 27 over 6 below what we call our trend 1. And Peter, if you let me, and I screwed this up last time, I'm just going to show you where this is.
Matt, if you keep screwing up on screens but keep finding gold, I won't have any problems, so don't worry.
Okay. So this is a graphic showing those 7 holes that we've drilled and press release in September, lower down in the deposit. And just, this is giving you an insight into how much more there is to come. So these holes are just drilling into the unknown, into areas where we don't have existing resources. We don't have any geological information. We're just going deeper. That clutch of holes here, we've already press released on the right. That was 170 meters below the existing resource. This new one there, number 337 at the bottom left of that slide, that's 500 meters again below the base of the old mine, 31 grams over 8 meters, including 242 over 1. Classic O'Brien mineralization. So, a broader mineralized zone dominated by this very, very hot grade, narrow intercept, giving you that very healthy result. And for context, if I just go to the next slide here, in cross-section, the cross-section on the left we published already. Those are the holes we released in September and then into October, showing the ore body extending down below our trend 1. This is the new one on the right now. And these things are at the same scale. So we're now down to 1,500 meters on that one on the right. There's the old mine. The stopes of the old mine produce 500,000 ounces at 15 grams per ton, half an ounce grade, closed in the 50s. Again, the first hole ever, in 70 years, since that mine closed, the first hole ever drilled below the old mine. Hard to believe that's true, but there it is. And there's the intercept, right exactly where we would expect it to be. Project that geology down, 31 grams over 8, including 242 over 1. So this is a top and bottom story. This project's delivering at the top with jewelry box type, 1.3 kilogram per ton over a meter intercepts up there. Now down here we've got 242 grams over a meter. It's terrific news for us.
All right, Michael, as board member, but I believe you're the largest, at least single shareholder. You've been in this, I think, probably one of your longest. This is one of your earliest investments, I believe, when you came to the resource sector, if memory serves me correct.
Correct, Peter. I made my first investment when I was still in my old firm institutionally, just personally in 2017. Made a very large investment in 2019, became a strategic advisor, and I think I joined the board in 2022, 2023. I can't remember the year I actually joined, but I've been in it for 6, 7 years, Peter. I would say, in all candor tonight, these are the two most important holes I've ever seen drilled in the project, and I haven't been with the company since inception, but I would say probably in the history of the project. The jewelry box hole we put out last week, and this 1,500 meter deep hit under the old O'Brien mine, and I'll explain why. The jewelry box, Peter, has really positive implications for, in my view, project economics. When you can find that kind of high grade, that close to service, we know the Julie box continued from 250 meters down to 750 meters. So the odds of it having good continuity all the way to surface are very good, as Matt said publicly the last couple of times he's spoken. But if you can find that kind of grade, anything close to that, over 200 meters between that surface, that's going to be a heck of a jewelry box to fund the potential eventual development of this mine. And Matt's spoken many times about how we think it's a very low capex project because we hope and plan to use someone else's mill and infrastructure in the camp. So it's basically the equivalent of finding a super high grade open pit as your starter pit in a bigger open pit operation. We found a super high grade jewelry box stope that could potentially fund a large portion of the capex to put this mine back into production. So that was incredibly exciting, and I can't wait for the future holes there. This hole here, Peter, I mean, just those pictures that Matt showed you are just truly spectacular. That 1,500-meter wide deep hit in relation to 75% of our resource being at 600 meters or higher. That's when Matt speaks about 3 million ounce being the target for the O'Brien, the near-term target. You don't have to be a math wizard to understand if you got 1 million ounces shallow and you're putting a hole twice as deep as everything you've had before, the vertical math indicates that you can double or triple the size of the resource relatively easily with a lot of drilling. Obviously, Matt's a lot of drilling to do, but again, the continuity of these stopes are fantastic. To put a hole 500 meters deep and to see it line up like it does on that cross section that Matt showed you is a geologist and a mining engineer's dream in terms of the continuity, the mineability, investor's dream like myself in terms of the predictability. You know, when you put a blind hole like that down 1,500 meters, we think it's going to be here, and you're able to put a hole there and hit it. That's just truly spectacular. And Matt can speak to the wedges that we're going to do. We're going to go, infill up 500 meters. And I'd remind your viewers too, there's no reason to think it can't go even deeper. Like 1,500 meters is not the limit that we can push this thing. But we've got, 4 or 5 shoots now, trend 0, trend 1, trend 2, under the O'Brien mine, where between 1,500 and, 1,000 meters or 800 meters is all open for business now. But this thing can also continue to push deeper. So this story keeps on getting better and better, Peter. I think Matt will talk to you about the progress we're making in terms of de-risking the metallurgy, de-risking the project economics and the mineability of this deposit. That's to come as well. But I think it's a fantastic time to be a Radisson shareholder and very exciting time to be part of the board of this company.
All right, Matt, that's the lead in. We're on the closing days of 2024. Lot happening now because of this. Take us into what looks like at least the early part of 2025, what we can look forward to.
Well, as ever, we're going to have drill results coming out into the new year. We're actually finishing the year with 4 rigs on site. We'll go down to 3 in January again. So a lot of drilling happening, and I think we're going to be telling the market what our plans are for 24, 25. Of course, we're funded for drilling in 25 after the financing we did in October, and we're going to go deep, right? We're going to focus on deep holes, as Michael said, with wedges and directional drilling. This deep hole, to be honest, Peter, we weren't expecting to get grade on this. It was meant to be the pilot hole that we would then drill from and go elsewhere and search around down deep and try and find mineralization and chase it. We didn't expect to go straight into mineralization with that pilot hole. So that's going to be the focus 25. We'll be talking about that. We'll be talking about the drill results that are flowing from that program. We've got a bunch of drill results stacked up from the end of this year as well. But we're also, of course, we've got this MOU with IAMGOLD. That's about looking at the technical compatibility of our ore going through the Doyen mill, which is the mill attached to the Westwood mine, the IAMGOLD. It's one of 2 mines that are kind of next door to us, that one and the LaRonde with Agnico Eagle. Doyen, as we've said, is an obvious candidate for us. It's a 3,000 ton a day mill, with Westwood currently giving it 1,000 tons a day. We would be about 1,000 as well. So, nice compatibility there. And I think early in the new year, we've been doing a metallurgical program, and we will be able to put some guidance out into the market as to what we think recovery is going to be and what we think flow sheet is going to be at the Doyen mill. At the moment, I can say we don't see any red flags. It's a collaborative process with IAMGOLD. They're being very collaborative and very, very helpful through this process. Of course, this MOU is consistent with what they've said publicly, which is they want to find additional sources of ore for that mill, and what we've said publicly, which is we want to find a mill for our ore. We don't want to build a standalone mine here. So that's going well. So we should be able to say something about that early in the new year, and then we go from there. But I think I said we were firing on all cylinders last time we talked, Peter. I really believe that. We're hitting sort of nice, rich, super rich, near surface, early cash flow type intercepts like the jewelry box. And then with this one, this is all about the future. This is all about getting to that 3 million ounces down to 2 kilometers and giving directional guidance that it's there, right? With these deep holes that are hitting like this. Exploration and then some little bit of guidance on where we're going with metallurgy and mill.
So, Michael, this is when I wish you weren't a board member, because then you could probably answer the question I'm going to ask, which I know you won't, even though I'm going to ask it. And that is, to me, it's, I understand the MUA and all that, but the Westwood, I just can't see them just allowing you to use the mill and making a few dollars off of that. But we'll save that for another day. Michael, what people need to understand on this, it's 3 million ounces, but it's not 3 million ounces of 1 gram gold. It's so much more high grade. It's so much more valuable. I think that's what people still haven't grasped the difference, because they're so used to lower grade deposits. So they hear 3 million ounces. They don't get excited, but this is 3 million ounces of I don't know of a higher grade one that's not developed, at least in North America.
Yeah, I mean, we've talked this a bit recently before, Peter, not a few previous interviews, but when I look at the value of an ounce on the ground, you've got to back into that valuation. Not all ounces are created equal, right? So it's really is what is it going to cost you to extract those ounces of that ore from the ground? So how accessible is it? What the mining cost is going to be? What your infrastructure cost has to be in terms of setting up the mill, the plant, the tailings, all the infrastructure, surface infrastructure you have to create up. You have to create a camp or roads or power. So what Matt does a great job explaining, in my opinion, why these ounces are so valuable. High grade means very high margin, so lots of ounces per ton of rock that you're going to move. But the advantage we have as being an established mining camp is you're going to have basically no other infrastructure to put in. So the only capex that we foresee at this project will be the extraction costs of the underground development that you have to take to pull the ounces out of the ground. The road's there, the power's there, the camp is there, the mills are there. Everything is in place. Usually that costs billions of dollars to set up that infrastructure in a brand new greenfield camp. It's all there. So you can have very high margin ounces coming out of the ground. So lots of ounces of gold per rock that you move, and basically no infrastructure costs. So the price you can pay per Radisson ounce extremely high for potential acquirers and still make a very high IRR, very profitable acquisition for them, versus finding 5 million ounces in the middle of the Yukon somewhere where you got to put all the infrastructure in place. I'm not saying those projects aren't valuable, but the value per ounce of those projects has to be significantly lower because you got to burden it with all the infrastructure to put in place. So not only are we the highest grade ounces on the market, we're the lowest, basically capital intensive ounces you can find, I think, in the gold market today, which means you can pay theoretically a very, very high price for those ounces. And one other thing I like to highlight in that regard, Peter, is we saw a bit of news since you last spoke to Matt, Agnico Eagle buying O3. Again, showing that thesis of the value is 65 or 70% cash premium. I forget what the final premium was that they paid for it. But again, the value of having ounces near existing mills where the buyer goes, I can buy you, and the only cost to me is going to be the extraction cost, and I'm going to run it through my mill. The price you can afford to pay for those ounces is much higher. And our ounces are much, much higher grade than what Nico paid for O3. Those are bulk ounces they want to move through their mill. We'd be high grade premium ounces, enhancing the economics, I think, of any project that would be willing to take our ounces through their mill. So very, very creative to the buyer. So we're happy seeing the M&A. We're happy seeing that our thesis being borne out with other competitors in the camp, and we know that our time will come.
Yeah, I was just going to ask you that question because I thought being in the camp was especially positive, because especially how bullish I feel in Quebec. Any last words, Matt? We need.
No, I'll reiterate what Michael said about that O3 deal. That was their business model. The proximity to another mill, and Nico took them out, recognizing the value there. We're the same business model. We don't intend to build this mill or tailings facility. Our ounces are going to another mill, and that's the path we're going down. And we're very happy to see that deal get done. It's a very logical deal. I think it was good for O3 shareholders and good for Agnico Eagle as well. And Quebec again validated as a great place to build a mining business.
I can't disagree with you there. Okay, gentlemen, if I don't get a chance to speak to you before the end of the year, we're going to be speaking a lot in the early part of the year. Good work today and great news, guys.
Thanks,
Thanks,
Peter.
Peter.